going to have to navigate in front and behind the podium because I'm not really great behind the podium. Although I'll tell you a quick funny story. When I was with KPMG, I did junior achievement. You do stuff like that when you're with a public accounting firm, and so I taught an 8th grade class. And first time I went to the class, there were 3 young ladies sitting in the front, just kind of snickering the whole time I was there. And you know, when you do public speaking, you sort of slowly check your zipper. And you know, then you maybe walk behind the teacher's desk, and it happened like 3-4 times during the course of that semester. And I was like, what is going on? And at the end, and maybe this is the joke I shouldn't tell, at the end of the semester, they gave me a card saying thank you, signed by everybody, and it was cut in the shape of boxer shorts. They were cracking up because they could see the line of my boxer shorts, and only their dads wore boxer shorts. So they thought I was an old man. So maybe that was the bad joke. Early 80s. So that picture on the left is 1982. And that is me, and I'm happy to say my daughter's here tonight. She goes to school at Florida. And so she's probably a little startled. She's seen me with hair once or twice before in my life, but they were all in pictures, I think. The other thing is you'll notice that Florida Field was artificial turf. It's much better now that it's natural turf. It was not a pleasant place to land when you were there. But I think when I look at that picture and then I look at the picture to the right, it's kind of an interesting process that I've been through since I was here at Florida. But I can say without question that my time at Florida was the most important thing to everything I've done since. Frankly, it's why I started to get back involved with the school, because everything I did here was fundamentally the launching point for being successful. And I'd like to tell you I've been successful, but I will also tell you, and you'll see in this presentation, I've also not been successful. And sometimes I think that's makes all the difference. And sometimes it's the thing that teaches the most. I'm going to tell you a little bit about this Gator story. And before I do, I just want to say thank you to Dr. Ling, Dr. Becker, Dr. Archer for allowing me to do this. This is a thrill for me. I think if, first of all, if you were to check in with any of my roommates from college, or maybe even my friends in the accounting school, if I said to them then, hey, you know what, I bet I'm going to maybe talk to the business class, the real estate school, they'd be like, yeah, all right. I think you're getting ahead of yourself. I doubt that's going to happen. When I looked at this, when I started my career, this would have been kind of a mess. Because back then, you kind of went to one place, the theory was, and that's where you worked. That's where you stayed the whole time. Your career was in a single place. That was generally kind of the notion. Funny part is when I went to KPMG, that was my concept. I really loved what I was doing. I thought I was going to do it forever. Now, I was telling some people earlier, one of the things I learned early on is one of the biggest parts of being good is being lucky. And I got lucky. I've gotten lucky on several occasions. I'd love to tell you that somewhere in their preparation or otherwise intellect or something had a role, but I know I got lucky, and you'll know this from this story. So when KPMG came to campus and they had a cocktail hour to meet the recruits, yours truly went to the cocktail hour in the only suit I owned, corduroy 3-piece with a wool tie. That's right. That's right, and I'm pretty sure that I was wearing what we would have called suede shoes now, but back then we called them desert boots. That was my getup for my professional interaction with KPMG. So, but that's all I had, so that's what you had to go with. However, I looked up at the end of the evening and I realized I was the only student still at the cocktail party. For whatever reason, the cocktail party was winding down. Maybe I was talking too long, probably. I heard the 2 partners who were really kind of the senior guys at the cocktail hour. I heard one of them say to the other, hey, what do you want to do for your birthday? So I went over and I said, hey, is it your birthday? Because if you want, I'll take you out in Gainesville, and you can really enjoy your birthday. And they said, absolutely. So I kid you not, the guy who I said that to is now the CEO of a very large company in Lakeland, but they're a very large, old Florida company. And I'm not ashamed to say that I woke up on the floor of his brother's trailer in Gainesville, realizing that I had an interview with KPMG that morning. So I get up, and I was like, man, I got to get out of here. And one of the partners was like, where are you going? And I said, I got my interview with KPMG in about an hour. And he goes, no, you don't. You already had your interview. That was last night. So I got lucky, you know, and it was kind of a Florida thing. But anyway, so, you know, the other thing maybe you should know about me is I come from a family of 5 boys. My dad was a career Army officer. And I mention that because when I thought about where to go to school and what it was I was trying to figure out to do, I landed on Florida pre-internet because it was one of the top accounting schools in the country. And I thought, growing up in a military family, that I needed an intro to business that seemed the easiest or most logical launch point into business, and accounting was it. So in my pea brain, I was like, all right, I should go to accounting school. Helped that one of my brothers was here, but he was graduating, so that wasn't really the issue, but they had a good accounting school. And then I wrote the coach, who was Coach Pell at the time. I said, hey, I'm thinking of coming to school there. Could I walk on? He goes, absolutely. So I walked on in the summer of '82. And before I reconstructed my knee, I was right behind a guy named John L. Williams, who was our starting fullback, #1 draft pick. Not that I was going to be, by the way, you could tell that. Even though I got 34, which I thought made me sort of Herschel Walker of the Gators at the time. So coming to Florida was a big step for me because I lived in Virginia. And it was, I graduated 870 kids in my class. I was the only one who went to Florida. And in a way, that was just the way I wanted it because I really wanted to find my way in college. And, you know, I'm going to talk about being lucky a couple of different times, but Florida was a huge, huge launch point for me. KPMG was too. KPMG was the perfect place for me. It matched my interpersonal skills, my accounting skills, maybe just kind of my inclination towards client service. And I was good at it. But I also got lucky. And what I would tell you is when you start off, there's kind of 2 things I've said before, and my daughter's probably going to just cringe. Because you can't teach attitude and you can't teach work ethic. You can't. So when you first start out and you got that boss, if he's got to try and motivate you, it's going to be a difficult process. You've got to come with that. That's got to be your given. And KPMG is kind of a good test of it because you work crazy hours. Sometimes you're doing stuff that seems like, man, I'm auditing fixed assets. You know, and it's just like, I'm not going to tell anybody about that outside of the workplace. But I was good at it, and I got on good clients. But when I went for my office visit, I met a guy in the interview process, and he remembered me. And when I got to Miami to start my career, he put me on his job. That guy is a lifelong friend of mine. He's a mentor, and he's been involved in several spots on that chart of my career. So what I would tell you, by the way, is relationships are going to matter, starting before now, but definitely now. The people in this room you want to stay in touch with pretty much forever because they may be working somewhere down the line where your company and their company should interact or should do business. I'm not that great at relationships, meaning staying in touch. But I've had a handful that I've stayed in touch with. If I would tell you something I'm not that good at that you should get good at is staying in touch with people that you've met. By definition, you're with some extremely talented people in this room. you're going to want to know them for as long as you can. So I got lucky. This guy met me in the interview process. He put me on his job. That job turned out to be one of the more complex, difficult real estate clients, maybe in the firm, not just in Miami. It was a company that was kind of well-known and then became renowned and then became infamous because their executives were indicted for fraud somewhere in the midst of my tenure serving their company. But they were a real estate company, and they exposed me to some issues accounting-wise that actually turned into something I got to use to advance my KPMG career, again, through another mentor. So this first gentleman who brought me along, one of the smartest guys I know to this day. He's also a really good golfer, but he's one of the smartest guys I know. He moved on. The next guy that took over that was my boss, I got lucky. Smart, looked out for me, and got me to New York. So I went from Miami to New York in this program that only 10 people in the country get nominated to attend. So I worked there for 2 years, and that took me from average guy in Miami to partner candidate, almost overnight. I worked on really the most technical issues at the firm. I was a liaison with the SEC. I was a liaison with the FASB, so basically the promulgators of GAAP. And I handled all the bigger issues where you had to get the ultimate sort of national office opinion. I'll tell you a hilarious story, by the way. So I get to New York. I'm kind of not sure I'm actually that technical that I really deserve to be there, but I'm trying. So I get a call from Ellen. In an accounting firm, you have units of ownership, right? So in the executive office, we had a book with the unit ownership, so you knew who was the most senior partner. So this guy calls me. I flip open the unit book. I realize he's top 10 partner in the firm. So he's got my undivided attention. So he gives me this technical issue for his very, very large insurance client. I said, okay, I'll get back to you. So I call him back up and I said, look, I got bad news. I went through the literature. You're not going to be able to do what you want to do. So, there you go. So he calls me back up, and I'm in New York. He goes, look, I've got an audit committee meeting in an hour. I've got to explain this to them, and I didn't really understand what you told me well enough to explain it to them. So run it by me one more time. As I'm walking through it with him, fire alarm goes off in the building. Now in New York, that's a serious business because I was on the 35th floor. So when the fire alarm goes off, the elevators don't work. You have to walk down to the floor, ground floor. So the fire alarm's going off. I'm talking to him. I realize he's top 10 partner in the firm, so I'm kind of hanging in there for a little while. Office manager comes in my office. She goes, you have to leave now. I said, yeah, it's probably just an alarm. I'd love to leave right now, but I got to take care of this thing. And so she walks off because I think she was corralling some other people. She comes back into my office and says, you got to leave now. I said, yeah, I really can't. Click, she hangs up the phone. So she walks out, I dial him right back up. I said, Gary, I don't know if you realize this, but the fire alarm's going off. So I got to go. And he says to me, great line. He said, Mark, I don't care if the flames are licking around the door of your office. You're going to finish this conversation with me. By the way, he threw one or two colorful words in there. And I was like, yeah, I thought I'd made it, man. I thought I was somewhere at KPMG. Now I know I'm not. The guy just told me he didn't really care if I burned up. But it set me on the partner track. And the partner track sent me back to Miami. And KPMG, I would tell you, I thought I'd never leave. I was good at it. I loved it. But as luck would have it, when I made partner, they changed the partnership structure. And I decided to consider that as a moment to reassess what I was doing for my career. And I started to think about KPMG as a really good ringside seat to business. You got to see a lot of businesses. You got to see a lot of organizations in action. That was pretty valuable. But I had this moment where I was like, you know what? I had a CEO say to me one time, right after I made partner, hey, where have you done this before? When I was advising him on this inventory issue he had. And I walked out of that conversation, I'm not even sure how I answered it, but I basically knew I'd never done it before. In fact, I was just giving him advice that was my sort of logic to it. And it started to make me think, maybe I need to rethink what I'm doing. Even though I've made partner, and most people would not leave once they made partner, I decided to make kind of a directional change in my career. Meaning, I decided to get out of the ringside seat and get into the ring. Get into a company and into the private sector. So that guy who was my mentor, who put me on my first audit engagement, he was the CFO at Vistana. And they had just gone public, and they didn't really know how to be public. And I had done nothing but handle public companies. So he gave me my second shot, which was my new job in the new world, which was in the private sector. So I went there, and funny thing was, he quit like 3 months after I got there. That is to say, he moved on. He didn't really mention that when I was, interviewing for the job, but that was all right. Because in a way, it made me realize I made this decision. I got to live with it and make it work. I can't lean on him. But I got lucky because he got me there. And we sold the company 2 years after I got there. And that was nice. I had a little bit of an equity stake, but not enough to, sort of ride off into the sunset. And now we were the subsidiary of Starwood Hotels, which was fine. It was a nice job. Orlando was great. We were living a good life. But then another former mentor of mine gave me a call and said that he was invested in this venture fund, and they had invested in an internet company. I know you guys are going to say, why did he say it that way? But back then, 1999, the internet was just past email. So the internet was totally brand new, and everybody was trying to figure it out and see if they could, basically be the first land grab and be the winner. So they had invested in this company that was in the internet. It was public, and they needed a CFO. So one of the things I'm going to talk about at the end is sort of some of my lessons learned. Here was one of my lessons learned from making this choice. I sat down and said, all right, it's a startup. It's a whole new industry, a lot of risk. I'm 33. Maybe the best time to take a chance on a flyer, maybe some risk, is maybe when I'm 33. I got a lot of stock in this venture. So I was like, you know what, if the experience works, it's going to be phenomenal because it's going to be my first CFO job, because I was the chief accounting officer at, that's what those little letters are, sorry by the way. So I was a CFO of a public company. It was going to be really pretty interesting, and the venture capital guys were pretty known guys. So all that sounded really good to me. So I took a shot, and I jumped over. Now, one of the things I was telling some folks earlier, one of the things you don't want to do, in my personal opinion, is what a lot of my colleagues at the internet company did. They were like, all right, I own 200,000 shares, options. Our stock today is $20. That means I'm worth, boom, I'm rich. Except you're only rich if you've sold that stock and been paid for it. So a lot of guys and gals were focused on, let's get the stock price up because that's going to make me feel wealthy, but really what we should have been most focused on is executing the business plan, which was a lesson learned for me. Not to take your eye off the ball of what you're trying to accomplish just because you think you're aiming for a dollar figure, because it's not just about the dollars. And there's a lot of different, axioms for, it's not the end game, it's not the finish line, it's the journey, or it's whatever. But these folks weren't really focused on executing the business. And I tell you, this would be the first moment in my life where I'd gone from being nothing but a success to being arguably a failure. That company did not survive. We liquidated the company in October of 2001. Now that date might sound vaguely familiar, but that was a month after 9/11. So here I was, out of a job, because we liquidated. I was the last to go because the venture capital guys asked me to kind of take it to the finish line, and frankly no one else would. And it was October of 2001, tricky time. So you go, man, I was a partner at KPMG. Man, I was a chief accounting officer of a public company. And now I'm out of a job. In fact, I'm not sure what I'm going to do. I kind of feel not so good about myself right now. But I would tell you, by the way, that failure was one of the best things that happened to me. And I'll tell you a couple reasons why. But the one thing I do know, the Vince Lombardi saying about it's not whether you get knocked down, it's whether you get up. Later in my career, the fact that I got up made all the difference for what I've done since. But it was hard. I took a job with Danka, who was in the copier business. That's right, copier business. And I was the VP of credit and collections. I had 175 people that worked for me, hourly employees that were calling customers every day. Now, did I know anything about credit and collections? Not really. Did I know anything about almost like a call center? Not at all. Could I really wrangle 175 people? Never had. But I needed a job in October of 2001. But I'll tell you this, I took that job, and a few years later, a friend of mine who worked for me at Vistana, she worked for me, she knew somebody who was moving to a different position at C&L Hotels. And so she was like, hey, maybe you should meet with him. It's the chief accounting officer position. Hey, I've done that. Hey, it's real estate, done that. And they're public, non-traded, but they're public, they're a REIT. So I met with the CFO, who to this day is one of my best friends, mentor of mine, one of the finest people I know at all. And what he told me was, after he hired me, was he said, it's because you were at that startup thing you told me about where you guys liquidated and you didn't have a job. He goes, that's my kind of guy. You failed and made it back. In October of 2001, I would have never thought that. I actually thought a lot of bad things, like I'm not really worth much of anything at all. So he hired me. We were about a $5 billion hotel REIT. When we sold it in April of 2007, we were a almost $8 billion hotel REIT. And I was saying to somebody earlier, April of 2007 might sound vaguely familiar because about 2 months later, the Great Recession started kicking in. So we were really fortunate. I was lucky to meet him because someone who worked for me introduced me. Relationships. I'm telling you, your relationships are going to matter, starting with the people in this room. All right, so that went really well. Oh, by the way, that was the game changer transaction for me when we sold the company. I was one of the top executives. It was financially a total game changer for me career-wise. But we earned it. We loved what we did, and I will tell you this about C&L. It's the place that I learned the most about the fact that you can work around really good people, and if you do, there's a chemistry that's almost unbeatable. We had a chemistry in our group that was palatable. You could walk on, you got out of the elevator at our office, you could feel it. You could feel it in our company. That's one of the things you want to seek out, the quality of people that you're around, because you're going to be around them a lot. You know, it's one of the things I decided about KPMG. The reason I liked them was I liked the people, because I knew I was going to be working a lot of hours. I didn't realize how many hours, but I was working a lot of hours, and man, you better like them. So the character and quality of the people that you're with, like the folks that I worked with at World Commerce Online, the other one I would tell you is you don't want to work with people that you wouldn't want to be a co-defendant with. Make sure you understand what I mean by that. If it really gets ugly, you don't want the one person that you're working with to be the person that goes, yeah, you know what, actually, I think Mark screwed that up. You got to be around better people than that. C&L, our team was incredible. And that's why we sold the company successfully, because we had something special. So coming off that huge success, the guy who ran investment banking for B of A was banking a deal with 2 private equity groups that were owners in Simply Self Storage. Happened to be in Orlando. Hey, happened to be less than a mile from my house. Ooh, that's good. CFO job, they were doing a platform deal. And this is another thing to learn from this experience. Your character has to be stronger than the people you're around. So I got to Simply Storage. I had 2 huge private equity funds backing this company. I had one of the bulge bracket investment banking firms leading a deal. I get in there, do what I normally do, having gone into another CFO position. Where's the cash come from? Where's the cash go in a business? It's going to tell you a lot you need to know about a business, just like that. Who we paying? Who's paying us? What I figured out was that the revenues that we said we had actually weren't getting paid. We had receivables that were aged 2, 3, sometimes 4 years. So I went to the CEO and I said, hey, I got some bad news. Our financials actually aren't GAAP. And by the way, when I unwind them into GAAP, we're in default on about $1 billion of our $1.3 billion in debt. He was like, really? I was like, yeah. I said, so we're going to have to tell our investors. He's like, do we have to tell them now? And I was like, it's not going to get better. So we better tell them now. Realizing, by the way, I just joined the company. I was about to kill the M&A deal. I was about to embarrass B of A. And I was about to tick off 2 of the biggest private equity groups I know, which was an interesting meeting, by the way, when I went in to tell them. Because the one group, very large institution, private equity fund, the guy looks at me and goes, who the heck is that guy? Because I'm in there going, well, your 36 assets are kind of in trouble and we might have to give most of them back to the bank. And the guy next to him goes, he's the new guy, he's the guy we like, because he just told us what's really going on. So, lesson learned for me, I was coming off a big win. C&L was a big win. Stepped right into a huge bucket. So I worked on a debt restructuring for basically 3 years, to which time I said to the 2 private equity firms, hey, when we're done, you're probably not going to want me here because we're going to be probably a third of our size. And so you're really not looking for a guy like me, even though I'll need a job. So sure enough, 3 years later, we went from 230 self-storage locations to 110. And sure enough, they didn't really need a guy like me. So in between Simply Storage and the Lollipop there, I took a shot at a startup REIT IPO that was senior housing. And I won't go too far into that because I didn't even put it on there, but the CEO of CNL was the guy who hired me to help him do this IPO. Relationships mattered. He remembered me, he knew me, he knew my character. IPOs are an interesting process. I've done a couple. They're not easy. REITs are an S11. Most public companies are an S1. That's your first registration statement, right? It's probably anywhere from 200 to 400 pages. Every number, every date, everything in there has got to be accurate. Otherwise, you subject yourself to risk. You go through a process with the SEC. The SEC tells you, okay, your registration statement is now effective. You can go sell securities off of this document. And then you go on what's called a roadshow, and you do what's called one-on-one meetings. And for Legacy, which was between Simply Storage and the Lollipop, we did 77 one-on-one meetings between New York, Boston, Baltimore, Detroit, Chicago, San Francisco, and back to New York in 4 days. 4 days. And in the midst of that, you're meeting with people for 45 minutes, and they got old guy like me, and they got young guy like you, and the young guy is ripping you apart, just going, all right, I don't believe this number. The cap rate on your first investment looks, too low, blah, blah, blah. It's an interesting process. But at the end of the day, what you're really trying to do is you're selling them on your company. And here's what they're buying, by the way. They're not just buying your company. They're buying you. What I would tell you is buying into an IPO, investing in a company, is as much about what they do as who they are. So if you see a theme between KPMG, between CNL, between World Commerce, Simply Storage, character always matters. Who you are, what they see in you is meaningful. You don't want there to be a shred of doubt. So if you're around people that have trouble understanding that, that's not the place for you. But you gotta be careful, because sometimes you don't know. Sometimes you don't know until you're in the door. I had 2 big private equity funds. I had Bank of America banking them. I had all these reasons to think that this was a great thing. 2 weeks into it, I realized they haven't done their books in GAAP. I mean, it's almost incredible to believe, right? So the little lollipop was one of my neighbors in Orlando. He had sold his company, made a lot of money, and I mean a lot. And his passion was renewable energy. And so he did this solar company, and I just came aboard to help him kind of create the infrastructure around his business while I was looking for a job. Because Legacy, the IPO, didn't work. Basically, think of it this way, a lot of times an IPO has everything to do with the market you're in or the macroeconomics around you. So here's what I mean by that. So we tried to raise $250 million. We had a portfolio of 6 assets that were $150 million. So we had $100 million that was kind of unspoken for. In the world of IPOs, that's a blind pool. So there had been 4 other blind pools before us that year in 2010. All 4 of them, on average, had traded off their issue price by 30% by the time we hit the road. So all these REIT investors were like, look, I'm getting killed on these other blind pools. Not really interested in your blind pool. So even though we had a good business, we had a good team, things that had almost nothing to do with us impacted our ability to be successful. So sometimes you're unlucky because the market's not working for you. When we tried to take CNL out, Google went out at the same time and pulled their IPO. Google's first IPO was pulled. Imagine that. I mean, can you imagine that? So then they did a Dutch auction. All right, so then I'll finish it off because I want to tell you about my company. CTO has been around since 1902. When I was looking for the job, we had a new CEO come in 2011, and he was from Texas. He didn't know anybody in Florida, so he called up a buddy of his from Texas who worked at CNL. He said, do you know any finance guys? He goes, yeah, I know this guy. That was me. So the relationship that I had with a guy back from CNL got me the introduction to Consolidated. Consolidated is such a cool story. 1902, these guys from Chicago came down and they bought 7 naval store companies for a little over $1 million in 1902. That's about, call it $600 million in today's dollars. They were in the turpentine business. So they had huge tracts. We had 2 million acres of land in Florida. And they basically harvested the sap, distilled it into turpentine, sold it to the Navy, which is why it was called a naval store company. Because back then the Navy had a lot of decks and things that were wood, and wood needs turpentine to stay limber. So that was a business. I have our first tax return from because by the way, you know there was, well maybe you don't know this. So income taxes were ruled unconstitutional in the late 1800s until the IRS kicked in 1913. And before that you had like a merchant return, which was really kind of a funny thing because you didn't really pay much in taxes. So I have our first returns from 1910. This company, my company, was making about 400 grand a year in 1910. So bottom line though is we weren't a turpentine company anymore, so we were a real estate company. A company out of Chicago bought us in 1923. I put some of these hilarious things up here, like the door to King Tut's tomb, which was discovered and opened in 1923. Then in 1969, they took us public. They sold 20% of our company to the public. So we've been on the exchange, not necessarily the New York Stock Exchange, 50 years this month. I have to tell you, I'm a little excited. In 14 days, we're ringing the closing bell at the New York Stock Exchange. It's going to be pretty cool. If you have a chance to go to New York Stock Exchange, you should do it. It's one of the coolest places First of all, because I'm a capitalist. It's one of the coolest places as a capitalist you could possibly go. Second of all, when you're watching Jim Cramer on CNBC, you don't have the actual view, because the New York Stock Exchange is this really cool building, and he's in this little part of it. They've actually created kind of a false ceiling because it's a much bigger building. They used to come in horse-drawn carriage to trade. It's an amazing place. You'd totally dig it. So then Baker Fentress basically liquidated in 1999, distributed us out, and we were fully public. We've been public since 1999, and we've been engaged in a strategy of monetizing our land, which is very low basis, 1902, selling the land and turning it into income. What I mean by that is we'll sell a piece of land for $14 million to a large convenience store, put that $14 million into a building in Albuquerque, or into 5 ground leases in Jacksonville that produce income. So we go from land that's not really producing any income to commercial rental properties that produce income, and that's our growth. And we do it using a 1031. Have you guys chatted about that? So we use the 1031 tax deferred. Cool thing about 1031, if we were to be successful and totally sell out of our land and have nothing but income, we'd be a pretty good candidate to convert to a REIT, because a REIT, typically the reason you're a REIT is you're a real estate company producing income, and you want to protect that income by basically distributing it. So the cool thing is we're a C Corp. If we were to convert to a REIT, the IRS allows you to reassess your tax liability, and if you can prove that you're going to hold the replacement asset, meaning the office or the Walgreens or the ground leases, for 5 years, you can write off the tax liability. In our case, that's $65 million. With my share count, that's like $12 a share to the shareholders, essentially. Kind of an exciting opportunity. So that's a quick story about CTO. This is the other way of talking about since I've been there, since John Albright, our CEO, has been there. I call it trends can be your friend. If your trends go this way, it's your friend. So revenues, earnings per share, operating income, which for us is pretty much cash, and book value. So everything we've been doing has been expanding shareholder value, creating shareholder value. So as I call it, transforming a sleepy company. When John got there, we hadn't sold land for 3 years. All right, because I know I'm... All right, I told you I was pretty much... I had a little bit of both. I've had some incredible success, and I've had some unbelievable failure. I tried to think of the things I might tell you that I wouldn't have really thought of sitting in your seat, a long time ago when I had hair. But just going through what I told you before, C&L, the character of our company was unbelievable. We were all together. We were all cut from the same cloth. We all believed in the same principles. We all had sort of the same character qualities, and we had something really special, something powerful. Consolidated, pursuit of a vision. I mean, one of the biggest things is when you get started or you're at a company, you need to know what the vision is. If you don't know what the vision is, it's going to be really hard to pursue your success, not yours personally, but the company's. So John came in, we kind of had a built-in strategy, but he kind of put it on steroids with a expanded vision. KPMG, I've told people all the time, KPMG was all about paying my dues. The way I thought about it was, there was nothing else in my life except KPMG. I was so driven to be successful that I kind of tried to blot out as much as I could in terms of other activities to try and be successful. I'll tell you, I was thinking about it on the way up today. Here's how kind of crazy ridiculous it was. For the first couple of years when I was at KPMG, at a firm function, I drank club soda with a lime so that it looked like a drink, so that no one would wonder if I was drinking, because it looked like a cocktail. But I would not drink at any KPMG function. Now, you could probably call that extreme. It probably was. But I was kind of so into it that I didn't want anything to get in the way. Then I saw one of my managers, who wasn't my boss, but he was one of my superiors, get completely hammered at a Christmas party and completely embarrass himself. Then I didn't care. I was drinking club soda no matter what, because it was a mess. Vistana, what was really cool about Vistana was going to a place where you could be valuable. Because that's one of the things you want to find, is where can you be valuable. The cool thing about being early in your career, when you're just starting, there's generally no stupid questions. You get to ask anything because you're just learning. You ready for this? My first day at KPMG, we had lunch with the partners. I said to one of the senior partners, I said, do you want me to call you Mr. Juergensmeyer, or can I use your first name? That's how I was thinking, right? Total respect. I want to call you Mr. So-and-so. And he was like, don't you ever call me Mr. Juergensmeyer. I'll feel old. But for me, I was trying to think through how to fit in, otherwise keeping it at a very high level, right? I was telling somebody earlier, I joined KPMG. I'll say my class in Miami was probably 26 people. And if you looked around the room and you ranked us academically, I was probably number 26. It's just the facts. Now, it's not something I'm necessarily proud of. There was a gal right around the corner on the table. I know she was a straight A student at Florida. I knew that other people in there were valedictorians, whatever else. I was the only one who made partner out of 26 people. So it's not necessarily whether you crushed it, although that helps. But in my case, I got lucky. I got around some people that helped me succeed, and I just happened to be able to throw a little bit of my ability into it. But being public, just being public, is an interesting dynamic. All right. And I gave you some of these. It's not whether you get knocked down, it's whether you get up. I think I talked to you about it. Don't count the dollars. That's not the thing to do. That's not the game. Because, by the way, if you do what you need to do and basically execute the way you need to execute, the dollars are going to take care of themselves. They will. Simply storage integrity matters. I'll never forget when my CEO looked at me and said, do we have to tell him that? I mean, that concept is almost hard to believe, right? Solar Blue was, unfortunately, the way I kind of thought about it, and the reason I didn't keep doing it was a business where they were looking for shortcuts. And generally speaking, you're not going to find shortcuts. You may find a better way to do it, but you're definitely not going to find a shortcut. All right. I'm not sure whether, I thought about what you guys might want to hear or talk about, because I've been with public companies, I've been with private companies. So public companies and private companies, there are some similarities in that your purpose is the same, creating shareholder value. Your shareholders are different. Public company, it's folks you may never meet, or it's some very big institutions. Private, you're going to know them personally. But you think about, hey, did I put reporting twice? That's awesome. That is so great. So, you think about shareholders. You know what? When you have other people's money, it is a fiduciary duty. You're a steward of their capital. You got to take that very seriously. You think about WeWork right now. I'm sure you guys have checked that out, right? So WeWork might be a good business concept at the end of the day. Might be. I'm not saying it is, and I'm not saying I don't like it. But I can tell you this. If you have other people's money and you spend it on you kind of violated the trust of what it is you're doing. Now, if you're going to fly private because there's something about your safety or you got to get somewhere and there aren't flights to get there, okay, I get some of that. But otherwise, you have other people's money. So if you look at that as a great case study, Buying a $60 million plane when you can fly commercial? Buying buildings and then selling them to your company? You get back to the character of who you are and who management is, you got to think hard about that. Those are the kinds of things I think is why you see where they are right now. That's my own view, but if you look at what that is, that tells you about the character of who you're going to give your money to. Now, if you're SoftBank and you valued them at $47 billion and now they're having trouble getting $20 billion, that doesn't feel good. Governance. Board of directors. There are things you want to make sure of in terms of your integrity and your character. One of them is transparency. One of them is basically you want to give the board everything they should know. Now, by the way, you don't give it to them in a lot of words, because I'm going to tell you right now what you give them to is you give them as many graphs and as many pictures. I'm not saying they can't really figure out words. What I'm saying is you want to communicate effectively and efficiently. And if you use a lot of words, you're going to lose them. If you use the word twice, you probably also lose them, but that's bound to happen. That's called quality control right there by myself. Source of capitals. A lot of times the difference to source of capital is real. When you're doing a private equity deal, it's a whole different ballgame than if you're doing a public offering. If you're, however, using a lender relationship, generally speaking, those tend to be the same. And I'm happy to talk about those, by the way, of various types. And then reporting. I've always believed that even if you're a private company, you should act like a public company. You should report that way to your investors. I'm not saying a 10K because there's a lot in there that candidly has to be in there because in this day and age, you have to cover a lot of bases. I mean, if you ever look at our 10K and read our risk factors, I mean, it's designed to, it's like being a doctor saying, well, you may not survive this. Risk factors are kind of that way. Like, these 57 bad things could happen. Do I think they're going to happen? No, but I got to tell you that because if I miss one and it happens, it's not good. I can tell you this, by the way. I've been a defendant in a lawsuit, and my company's been in a class action lawsuit. None of those are good. However, it doesn't always mean you're a bad person. It just might mean that the class action lawyer decides they want to see if they can squeeze something out of you. Because the first thing they'll ask you is, hey, what's the limit on your D&O policy? You guys know what a D&O policy is, by the way? So when you're the director or an officer of a public company, they have insurance to cover the company for class action lawsuits or otherwise litigation around the company's activities. And sometimes, maybe even often, a director or officers will be named. So you have to be defended, because otherwise the company would kind of come apart if the officers weren't being defended. So they have insurance policies out there for that called D&O policies. It's a very interesting business. It's a interesting environment because in the SEC, in the world of the SEC and SEC reporting, there are sections of the code of the rules and regulations basically covering omissions of fact, misstatements of fact, otherwise saying things that aren't true in a public filing. That's what class action lawyers seek out. Now, you'll have some that are bad stories. Enron, bad story. So when you think about Enron and you think about rules and regulations of the SEC, you kind of get it. If you think about my company that was sued, it was really just that they didn't like non-traded REITs. They thought there was something nefarious in there. So it's a little of both. All right. Oh yeah, here's, hopefully I didn't repeat anything in here. All right, we talked about it a little bit. Early on, and frankly even now, you can't teach work ethic. You can't teach a good attitude. It sounds simple, by the way, and I know my daughter is tired of hearing it probably in her lifetime, but it's real. Character counts, particularly the people you work with. You know what you're made of. Stay true to that, but be very mindful of who you're around. I mean, going back to WeWork only because it's just been in the public domain. You know, if you're the CEO of a public company that's of a private company that's raised billions of dollars, you should really think it over before you hop on a private jet with enough weed to make the guy who has the private jet take it away. You know, even if you wanted to do that, you should probably think about it differently, right? So, you know, who you are around matters. So you got to be very mindful of who you are around. Good news is right now you're around some really good people. But when you get out there, I told you being lucky is part of being good. My first couple of mentors, I got lucky. Getting on a good engagement, who happened to have a lot of problems so that I became sort of an expert in something no one else was an expert in, that was lucky. You know, finding the next job because I had a relationship with someone who had a good connection for me, that's part of being, that's a little lucky and otherwise maybe being a little good. I think I covered most. There's one other one in there which might not fit so great in the public school domain, but what I would tell you personally, and I'm not going to go too far into it, I think faith for me has been a big difference in my life. It's not something that you study at business school, but if you have that moral compass, which is where I'll really kind of leave it, that's what's really important. But I can tell you, when I lost my job, when we liquidated World Commerce Online, I needed that. I needed that foundation. Because sometimes when the chips are down, otherwise when things aren't going well, you might have fewer friends than you thought you had. So, I think I might have crushed you enough. Oh yeah, I did. So open up for questions. Happy to talk about anything I talked about. I was really fortunate to come to UF. Not just because it's UF, which is really fortunate, but who I was around. I mean, I had some professors that were so awesome. I've told the story before. I had this one professor, Dr. Yu, and he was teaching Finance 1. So he'd get up there and he'd do a present value calculation on the chalkboard, and he'd put up all the factors, and then he'd go, all right, so the rate of return is, boom, boom, and he'd write it down. And we'd all have our HPs, and we'd be like, yeah, that's right. And he'd turn around and he'd go, Dr. Yu never wrong. Dr. Yu always right. And we were like, Dr. Yu, come on, you've done that problem like, I don't know, 10 times, including once before you came in here. It's like, oh no, I figured that one out. I had a professor who basically had a tab and Sucrets every class. Dr. Denslow. Let's see, what else? Oh, I had a tax professor here named Jesse Boyles, and I was pretty much flagging his class. I was not doing well. I was probably C. So we had the final, and I studied my face off. And he was pretty direct guy. And his tests were, here's the problem, there's the blank for you to put your answer. So you were either right or wrong. There was nothing in between. So I was the first to get up. I handed him the test. He looked at me, and I know he was thinking, didn't go well, did it? I said, you know what, Dr. Boyles? I don't think I missed a question. And he's like, yeah, that's probably not right. But he was a little shocked. I missed 2. So in my career at Florida, this was a place that made all the difference. I'll tell you, David might freak out a little bit. So I also took a public speaking class. I don't know if you guys have taken that here yet. You have? Okay, good. Because that's really important. It is. Because if you're in a boardroom, if you're in a presentation of any kind with a lender, a shareholder, doesn't matter. It could be one person, it could be 10 people. You got to be good at conveying your ideas And as I would say, you got to be good at taking complex topics and otherwise information, synthesizing it into something simple. So I will tell you, by the way, so my first speech for public speaking was a instruction. This will tell you a little bit of why I was number 26 in my class at KPMG. So we walk in, and the first person got up, I don't know, did something goofy. So then the professor was like, all right, Mr. Patten, would you like to go next? Absolutely. I get up there and I said, these are the components for a beer bong. I'm going to teach you how to do a beer bong. Professor was in the back like, wait, what? I was like, yeah, this is an instruction, right? And he goes, yeah, I don't think you can drink beer in class. And I was like, wait, what? That's an important part of my instruction. So my first day at KPMG in that room of 26, that valedictorian from Florida, she looked right at me and she goes, were you the guy that did the beer bong thing? I was like, yeah, that was me. And I know in her mind she was thinking, how is he at KPMG with me? Anyway, I'll take any questions. Jack.
So I see your firm is involved in a lot of traditional real estate services, but also has golf operations.
Yeah.
How does that fall into play?
So if I had a map of our land, so we had 2 million acres of land. Over the course of 117 years, we got down to 10,000 acres in Daytona, all in about a 5-mile radius. In there in the early 90s, Daytona, the Ladies Professional Golf Association was going to move from Houston. So there were a bunch of companies that wanted them to move to their town. So Daytona decided that they wanted to pitch the Ladies Professional Golf Association to come there. They came to us, me and John, they came to us and said, hey, will you donate the land for this signature course for them to put their headquarters on? To which we said yes. In a inexplicable move, by the way, we said, we'll donate the land to you, and then we'll lease it back for 25 years and run the golf course for you. I mean, I can't explain it to you how anyone's brain would go, I'm going to give you the land, and I'm going to lease it back, pay you rent, and then I'm going to run your golf course for you. But we did, and I can tell you that golf is not a great business. It's fun to play. I like it. But it is a brutal business, particularly if you're in a market with a lot of daily fee play, where a round of golf can be like $20, and then it's really hard. But yes, we have a golf course, a country club. I like to play there. I don't like to own it. We also have, this is really kind of intriguing. I'll just go off of your question. So our 2 million acres of land were stretched across probably 20 to 22 counties of the 67 counties in Florida. So if you look at our map, everywhere, we're in a lot of counties. Somewhere along the way, a super genius that worked at our company, and maybe somebody else, but as they sold off the land, they bifurcated the surface acre from the subsurface acre. So a mineral interest from the actual dirt that you and I walk on, right? What's really fascinating is with the subsurface acre, I have the right to enter your surface acre and drill. So if you're building a 300-home community, you're going to want to pay me to relinquish that right. Or, by the way, there may actually be something underground that's worth it. Phosphate, oil, whatever. In our case, it's a little bit of both. We have some oil leases, and otherwise people pay us to relinquish our surface entry right, which kind of blows your mind, right? You can only imagine you're the developer and you're like, wait, what? Somebody owns the stuff underneath the surface, and I got to pay him for it? But that is how it works. So whoever figured that out, we're the beneficiary. We have 460,000 subsurface acres in Florida. It's kind of crazy, right? Who's next? Am I killing you? Why don't I have hair? I'll tell you why. It's mostly because, when I was at KPMG, I was probably working 8 hours a week. I think I worked 2 years in a row with 500 hours of overtime. Think about that for a second. Yeah, but KPMG was awesome, man. I also did some crazy cool things. I did an inventory. This is speaking of, how you operate. So I went to KPMG. I said, look, I'm single. I don't know anybody in Miami, so I'd love to travel. So if we have out-of-town engagements, I'll take them. Scheduler came to me and goes, hey, I got an inventory for you. Really? It's in the Caribbean. I was like, I'm in. It's over New Year's. I'm in. So they fly me to St. Martin, and I have to go to St. Eustatius, where they have one huge oil tank sitting on St. Eustatius. And I have to do an inventory of that oil tank, meaning how much oil is in the tank. So I'm hanging out in St. Martin for New Year's, but then I go to St. Eustatius. I meet this big fella that runs the thing. What I don't realize is that an oil tank is a really large structure, and I have to walk around the outside of it on this little teeny island in the Caribbean where it's kind of windy. And then I have to walk out to the middle, the top of the oil thing, and drop this thing down there to basically check the depth of the oil. And I'm standing on there like holding on for my life, going, I don't know if this was worth it. I don't know if 3 days in St. Martin was going to do it. Yeah, so I've had some crazy assignments in my KPMG days. Yes.
You emphasize the value of mentor relationships. How do you really develop a mentee-mentor relationship?
So I think I probably you really want to public speaking, by the way, is a larger version of interpersonal skills, right? And you want to make sure that your interpersonal skills, you're comfortable, like me basically going up, and basically saying to somebody, hey, kind of being willing to sort of step out there. Well, once your interpersonal skills kick in, you're going to meet people that you've identified in your organization that are smart, you can tell are on the way up, or they're on the way up. If you can get around them and basically strike up a friendship where they take an interest, it's probably going to turn into something like that. And you need mentors, because as smart as you all are and as capable as you are, you need people to help you along the way. You just do. So I think you look for that. And then once you kind of go transition from being the mentee to maybe in a position where you're the mentor, you kind of go off your instincts and what you remember the other people looking out for you, what they did. But you got to take a personal interest. You got to communicate, spend time with them on a kind of a regular basis, because people are funny. Dollars and cents are nice, but attention. When I say attention, I don't want to make it sound like you're taking care of a kid. What I mean is paying personal attention to their well-being and otherwise how they're doing. That will matter. Giving them praise when they do really well. I mean, I still like that. I like that. Everybody does. It's nice to get a paycheck, but it's even better for someone to go, man, your investor deck is the best I've seen. If you have a shareholder tell you that, you're like, all right, I'm doing right. I don't know if that's. Yeah, it's even now I rely on my mentor relationships. I bounce stuff off of them, so you'll always be able to do it.
Which stage of your career would you say you were grinding the hardest, working with KPMG?
Man, that's a great question. I would say, so KPMG, I worked crazy. Now, I'll be perfectly honest, KPMG paid time and a half for overtime back in the day. So yours truly, I never had like real money. So when I got to KPMG, I was actually making real money. If I could make time and a half, oh man, I was working my face off. So any overtime, I took it. But I also got on big engagements where they did big transactions, and the transactions, they have time pressure, and they have kind of intense elements to them. So you tend to work extra hours. So I'd say KPMG, I did it partly because my clients basically didn't care if I died sitting in their office, because I was their auditor. Fast forward, when I was at CNL, we did an IPO, and it was, I worked probably 2 times, probably 26 to 30 hours in a row, sitting at a printer in Tampa, going through a registration statement, making sure every date and number was right? Fast forward to now, at CTO, we're 14 people. We don't have any excess, so if it has to get done, somebody's got to do it. We're in a transaction right now where I'm working insane hours. I mean, like, I think I told you, my last email last night was 1:06 this morning, where I said to the person in the email, hey, when we meet later today. And it always feels a little weird when you say that at 1 in the morning. But I'm a shareholder in Consolidated. So I have a vested interest, personal interest in the success of what we're doing, which, by the way, is a great point I should have probably made. One of the things you're looking for in anything you do is alignment between the people that work there and the people that invest. You want that alignment. So what my big shareholders know is the biggest part of my net worth is in this company. So what do you think I'm going to do to ensure its success? Almost anything. Not nefarious or otherwise bad, but what I mean is I will sacrifice almost anything to make sure we're successful. Yes?
Could you elaborate on the days that things didn't go well after you liquidated your internet company? Like what the faith part?
The faith part?
Yeah.
Yeah, so I also got pretty fortunate because I had an event in my life that kind of changed my whole perspective and worldview on faith and my belief in God. But I can tell you, when I was out of a job, if I didn't have my family, but if I didn't have my faith, it would have been really hard to kind of go at it every day and try and find the next job. Because I can tell you, you guys probably already know this, the hardest way to find a job is without a job. So when you're without a job, they kind of know first of all, they kind of wonder to themselves, why don't you have a job? And then you got to tell them, ooh, well, my company liquidated. But so for me, my belief and sort of my faith, meaning the church I went to, was hugely important for the really dark times where I wasn't sure I was going to make it out. And by the way, in my own little world, it was worse because I had just been a partner with KPMG. I felt like a complete idiot. Somewhere between an idiot and a loser, I'm not sure. But, so my belief in God was a big part of, and ironically, when I went to CNL, I would call CNL, by the way, a faith-based organization. We had men's Bible study lunch on Monday, and women's were on Thursday. And we said a prayer before every board dinner, just to give you a few tidbits. So I believe that sort of my faith journey was a big part of me getting to CNL, to be perfectly honest.
So clearly you've held multiple roles in your career, the corporate
Yes.
and the entrepreneurship aspect. Would you recommend us going into more of an entrepreneurial role coming out of college because we'll learn more rather than going straight corporate?
Man, that's a great question. It's hard to necessarily answer. I think you have to, what I'm hoping is that you have different opportunities to consider. What I like about a corporate job, whether it's an accounting firm or a consulting firm, what I like part of that is that it gives you a good way to launch. Because if you go straight entrepreneurial and it doesn't go well, you get knocked down, you get up, but it could be harder. That's not to say though that you shouldn't, because frankly, if you had a shot at being at Amazon or at Facebook or whatever, you didn't want to look back going, I should have taken I took the corporate job instead. I think you got to take a look at what the opportunity is, and you really, like I said, you get a good sense for who you're going to be with. And by the way, use your skills to go, would I invest in this business because I'm about to? Your job, your career is an investment in that business. Would you put all your money into the job you're going to take? If you would, that's a good place for you to be. So it may not be a perfect answer for you, but it depends sometimes on what the opportunity is right in front of you.
What's a typical work day of yours look like?
Typical workday for me. Typical workday for me is I roll in at about 7:45. I eat lunch at my desk. I'll go out and get it, or I'll have it brought in, and I'll leave at 7:15, give or take. I will work at home. I will sometimes, unfortunately, wake up before my alarm clock goes off, and I will do something that's work-oriented. That's what I'm doing right now. I'm at kind of a growth company with only 14 people. So it's kind of super stressful. It hasn't always been like that, but I've always generally been an early riser, and I normally am not great about not taking homework home. You know, my backpack always seems like it's full. If you picked up my backpack right now, you'd go, what is in here? I'm not saying that's a good idea, by the way. I'm not saying that's a good idea. And by the way, limit your caffeine. Limit your caffeine, because it's a, you know, sometimes I feel like Elvis. I'm on an upper all day, and then I need something to get down at night, you know, and I don't really want to have to drink 3 glasses of wine, or whatever. But yes.
Would you say you've learned more from your successes over your career or the failures?
I think I've learned more from my failure, because it stung the most, and you really had the greatest amount of introspection of why didn't that work? What happened? I've had some crazy scenarios in the failures. Like I said, I went in front of this private equity guy. If I told you which fund it was, you would know. And this guy just went off, and I've never but that conversation we had, the intensity of it was, I had to believe in what I was telling him. I couldn't really waver. And, you know, at the end of it, he kind of was like, oh, I needed to know. You know, I'm pissed, but I needed to know. Liquidating our internet company taught me a lot about the quality of the people that were around me and what they were really doing day in and day out. I mean, back to WeWork, by the way, is a bad example. I got to, you know, here's an internet startup, and the top 3 guys had cars. And I was like, we're a startup. What are you doing with a car? That should have been my first, like, oh, you know. So I think the failures hurt the worst, and they kind of taught you the most.
So I think a lot of people in here want a position in top leadership, whether that be a CFO or president. How important do you think it is to not necessarily get a degree in accounting, but maybe spend a year or 2, or you know, or get a certain degree or something, or have a generic background in accounting? Which one do you think is better and is necessary?
Having some knowledge about accounting?
I mean, of course, some knowledge, but you know, you have your certification and
Yeah, so I have a phrase that I've used for a while. I think the reason I'm good at what I do, if I can say it that way, in my position, is that I'm good at down and in and up and out. You could say that a different way. I'm good at the details, and I'm good at the strategy and the messaging of what we're doing. That down and in is accounting, is process and procedure and controls. You want to, you know, a lot of times you talk about things like accounting, or you talk about controls, and it sounds like a drag, or it sounds like it's a little bit annoying because you know you kind of need it, but you don't really want to talk about it. But controls actually are the thing that kind of sets you free, because you know the parameters. People know if the financial authority matrix looks like this, that if they stay within that, they won't get in trouble, fired, or whatever, and you know what your kind of authority is. So you're a little more unencumbered, or you're not as encumbered by, I don't know if I can do this or not. What I would tell you is accounting is, I think, really important. It's a lot like, you know, what's interesting to me is a lot of investment bankers are lawyers. And what's intriguing about that to me is that means they had a finance degree, and then they became a lawyer, so that they have this ability to know finance and then also execute an offering, a registration statement. So it's a little bit like accounting and otherwise kind of other aspects of an organization. But I think accounting is, interestingly enough, very fundamental. So I would get as deep into it as you can, because you want to be conversant and well versed with it. Yeah, I mean, for me, I'm jaded. KPMG was an unbelievable starting point for me. It told people what I was made of. They knew I worked hard, and I got to see a lot of businesses that were good and bad. That's what I guess I'd tell you.
One last question? All right. Well, thank you very much.
Thank you.